Wow, rookie mistake there. Hi, everyone, welcome to another Learn, Grow, Invest meeting. My name is Jermaine. If it's your first time here, welcome. We meet like this at least once per week. So if you're just new, be sure to subscribe. We try to speak about all areas of investing, personal finance, real estate where possible. Some other topics may be coming up soon that may be interesting to discuss as well. So, feel free to subscribe and share this link, this channel with other persons who are investors. So for this evening, we're going to be talking about renting versus buying, which one makes the best investment. Before we do that though, I'm going to open in prayer as we normally do. So let us pray. Lord, we thank you so much for this day. We thank you that we're able to see it. Father, as we meet here to discuss, I pray that it will be a meaningful time of just great discussion and fellowship as investors, as persons who are interested in advancing their knowledge and to build wealth. So we pray for your wisdom, for your insight as to the best, approach for each of us. And I pray, Lord, that your Holy Spirit will be here with us in Jesus' name. Amen. All right, so I'm going to ask you to share the video, guys. Share it. We want as many persons as possible to join in the conversation. I'm joined by two friends of mine this evening, so I'm going to bring them on shortly. They're just telling me that, well, I'm seeing the message where they're telling me that I was muted. That never happens, but, that's how it goes. So I have Xavier here. Xavier joined us a few weeks back. I'll allow him to introduce himself shortly. And we have Dimitri Dawkins, old friend of mine. We haven't seen each other physically in years, but Dimitri and I go way back from Startup Weekend. If you don't know Startup Weekend, then that's how long you haven't really been a part of this space. But Dimitri started to talk about something on Twitter this week, and I thought it would be good to invite him to this conversation. So thanks for joining us, Dimitri. So we're here to talk about renting versus buying. But before we do, I want you guys to just say a little bit about who you are, what you do, and just your initial thoughts on this topic before we, dive in.
Sure. So thank you so much, Jermaine. Thank you for having me back. It's such a great space. I love what you guys are doing. So my name is Xavier Johnston. I'm in fintech and finance. So we work with finance and technology. And then besides that, I also do financial analysis for businesses, equity valuations, company valuations, stock valuations, and so on. So I just hope to be able to contribute to the conversation. I think this is one of those conversations where there's no right answer, right? I mean, even though I know we're going to try to show the math a little later on, it's one of those things that really don't boil down to the math.
Yeah.
It just boils down to the individual's goals in life and where they are in life, what they can and cannot manage. You don't want to be over leveraged, and you also want equity and to pass something on, right? So it's going to be a very interesting conversation that I'm certainly happy to be a part of. So thank you.
Yep. Dimitri.
All right. Once again, thanks for having me on the program. Glad to be here. It's my first one, so looking forward to all the interactions, and hopefully we'll be back again soon. Background-wise, like Xavier, also in fintech. I'm a fintech operator for the Phoenix International Core Banking Platform through MC Systems. I'm also a venture capitalist at Graft Ventures, where we invest in tech-enabled businesses based in the Caribbean with exportable products and services, looking to scale into the next big thing going forward. Growth stage primarily, not seed stage currently. So overall, for this topic in particular, I'm sick and tired of my family coming to me like, oh, when are you going to buy a house, or why haven't you bought something by now, or why are you still renting, or blah blah blah. And it's like, guys, everybody has different priorities, and I like just being open and discussing the facts and discussing different points and different points of view. And hopefully we can have a great discussion today so that more people can be better informed and make their own decisions as far as what best aligned with not even just the practicality of life, but their personal passion for what they want to achieve.
But that's the main thing for us to overcome first, right? That expectation growing up that owning a home is the thing. Like it's it's the goal apart from, getting married and having kids. A home is on that list. So a lot of us don't even know why we want the home. It's just on that list in our mind from a very long time.
I think it's one of those things that have to do with security. You know what I mean? Having your own home over your head, as well as being able to pass something along to your children.
Yeah.
And so I think it's very important. Don't get me wrong, but I think that one of the key takeaways from such a conversation is that you should not feel pressured to put yourself in a position that you shouldn't be in. And likewise, if it's time for you to step up and say, you know what, I can't own a home and let me do this, then feel confident in knowing that it's something that you can do, that you are making the right decision, if in fact that is the right decision.
Yeah, as long as it's your decision, right? So it's not really, being done because there's just this innate thing driving you towards it. You don't really have, because if it is that you're not sold on the reason for doing it, it will be frustrating because owning a home is a big responsibility. And we'll get into that a little bit later, the advantages of both, but just understand that it's a major thing, right?
Mhm.
Yeah, so where you guys want to take this from? Do we talk about renting first and what that looks like? Do we talk about from the investment side first? Because I mean, most of our audience are investors. So in terms of maybe an investment perspective, which one makes the most sense?
Yeah, I think just I'll kick it off just because this is kind of where we were speaking about it the last time, and then you guys can kind of follow up. But so picking up from where we left off in the last conversation, I think what it boiled down to is just like everything as we were discussing, it's up to where you are in your life at that point, right? So there's a lot of things when you consider home as an asset. There's a lot of hidden fees that you don't necessarily see right off the bat. That's your HOA, the maintenance of the house itself, homeowners insurance. If something were to go wrong with the house, so besides routine maintenance, if the roof were to cave in or you have bad piping, anything like that, these are things that are going to eat into your investment, right? And so I don't think it should be seen as, I'm going to buy a house. It shouldn't be taken for granted that your rent is going to cover your mortgage. That's the first thing, especially in Jamaica where we have our consumer purchasing power doesn't really go that far, and so the rental prices reflect that for the majority of the market, right? And then we also have this perception where real estate appreciates, but as we identified in the last discussion as well, where our friend there, Jillian Jackson, that's saying, hey, if I'm to borrow from your blog again, Jilly, I think I'd mentioned homes appreciate maybe 3 to 4% per annum or something like that. So it's not the fastest appreciating asset out there, right? And these are all the things that we have to take into consideration.
Yeah. On that point, once again, shout out to Jillian and all of the calculators she creates. Definitely for this discussion, guys, if you haven't seen her rent versus buy calculator on her website, I think it's financialsensibility.com. Definitely use it. I've used it personally. It was an eye opener to me. But yeah, Xavier, just to echo your points, like even on the last point, okay, well, I want to touch on two things, but you said something very important about the 5% increase in valuation over time. And given our high interest rates for home mortgages, if you even are getting a top class, best rate right now of about 6.5%, you're probably still paying a higher interest rate than your appreciation of the property per year. So you're technically losing each year. And when we think of spending that sort of money over 30 years, it really isn't that great an investment because you have actually paid so much in interest over that time period. If you bring it down to say 15 years, then great. But then, as Xavier mentioned, like we don't have the spending power most times because of our consumer price index, etc., salaries, blah blah blah. So, and of course, the additional fees of what if you get a hurricane? What if the tree drops down outside and hits the roof? What if your pipes explode one day because they're old and rusty? Different things like that. So, really, the second point being from an investment standpoint, we really need to understand that, okay, is our buying a home a matter of personal security, or is it an actual expansion of your investment portfolio into real estate as well? Because we really should separate that okay, we need somewhere and we want this security of knowing that we own our property and people can't kick us out of it, or whatever other challenge that you had mentally in the past, or perception, and just thinking, is this really a good financial choice? Especially with rent being relatively affordable compared to mortgages in particularly like Kingston and St. Andrew.
Mm-hmm.
So, I mean, I don't know what happened. We called Jillian's name, and here she is, you know. Hey, Jillian, welcome. So, Dimitri had
a miracle, I'm here.
Yes, prayers are being answered. You're a numbers person, Jillian, so you can tell us really, you know, what the numbers are saying. I know you've done, you know, surveys, try to understand things from that perspective. What do you have to say based on everything that we've discussed so far? Does it make sense, really?
I missed out on part of the conversation, so I apologize about that, but I was trying to get on. But from what I did hear, I agree with what has been said so far, what Dimitri just said. Hi, Dimitri and Xavier, by the way.
Hi,
and Jane, about thinking about it in terms of, is it the right investment? So you can buy a home for many reasons. If you're looking at it from an investment perspective, you have to crunch the numbers and see if it makes sense. David is right. The house appreciates at a maximum, I think, over the past couple of years, maybe 6% at a maximum. So 3 to 4% is the return you get on average. Thinking about, and there's so many factors that you have to consider. So thinking about that, can you get a better return than that doing other investments? Quite likely so. If you're a savvy investor, you can do other types of investments and get a better return than that. But some people, as Dimitri alluded to, like the stability of home ownership and the stability of real estate, and it's kind of a little bit more predictable. So in general, in Jamaica, you know, house prices don't really go down. We haven't seen that really happening. Not to say that it can't, but in general, they don't. So it's more of a predictable cash flow than the stock market, which, you know, has the volatility of up and down, which some people can't just can't stomach that type of investing. So it depends on the type of investor that you are. And you really have to crunch the numbers to see if you can do better in other investment vehicles. If that's your goal of just maximizing your capital, there might be other investment vehicles that are better for you. If you don't like the volatility of the stock market and you're comfortable with real estate and for example, if you're willing to put in some sweat equity and to improve the value of your property yourself, it might have better returns than 3 to 4%. It might have 50% returns. If you're willing to put in the work. So it depends on your personality and what you're willing to put in. Different strokes, different folks.
Yeah. There is one thing I'd kind of like to mention as well, is that if there is anybody that's watching, that's considering, I don't want this to scare them, right? To say, you know, you're making a bad investment or you shouldn't buy a home. There's also another way to look at it as well, or two other ways. So there's this person on Instagram that I follow called the Budget Mom. I think she is. And essentially she just bought her house outright cash, right? And she's one that always says, you know, save and invest and yada yada yada. But she bought her home outright cash, and she's like, yes, I know I could have spent this $200 and something thousand, or I could have invested this 200 and something thousand, and 20 years down the road, it's millions of dollars. But you know what? This is right for me, right? This is right for my family. There's another big topic amongst, particularly our generation now as well, is around generational poverty and breaking that cycle, right? And so let us say you're the first person in your family that's been able to attain a home, or you're in a position to purchase a home. Just because it may not make perfect dollar sense or financial sense, you're not going to get 9% per annum on average, you're going to get 4%, but you're able to pass on that asset and break that cycle of generational poverty, then that's something to consider as well, right? You're able to put your children, or whoever it is you're putting, on kind of a foot up in life, then, so to speak. And these are things that you can consider as well. It doesn't necessarily just have to boil down to hard figures.
Yeah, I agree with that. For me, and the way that I think, so I definitely see that ability to lead. Because one of the things my wife and I said was that, you know, we looked around when we just got married, and we're like, man, it would be nice if our mom and dad left a house for us. It would be nice if we had that, but we understood that we would have been maybe the first to try and build that same thing that you're alluding to Xavier, for our family. But I look at it actually, so there are many ways to leave wealth for your family apart from a house. That's a building. There is, knowledge you can pass on. There is maybe cash that may be more valuable for them to choose what they would want to do.
A good
Because
insurance policy.
leaving a house, exactly, leaving a house is a responsibility they may not want, because a lot of persons are tied to the family house. It maybe wasn't maintained properly before they get it, and now it's more a liability than an actual asset.
That's true.
And
And
splitting it
so,
up can just be so messy as well. I mean, I've seen so many family problems start from that.
exactly. So I made my decision just based on the numbers. So, there was an emotional element to it for me and my wife. My wife wanted to have that security as well. I wanted to not have the restriction of a mortgage, because I'm like, if you have a mortgage, if you wanted to change jobs, it's not that simple, because you're like, okay, I have to make that payment first of the month. It does kind of restrict you in that way. But we did the math. We're like, okay, if we're able to purchase this property now, maybe 20 years from now, since we're at a certain age, maybe we pay it off within 20, 30 years, and then hopefully we'll live another 20, 30 years after that, rent mortgage free. That doesn't sound too bad to us, and maybe we can use certain strategies to pay it down sooner. And a very big component for her was just peace of mind. So she was like, that peace of mind is priceless. There is no value to it. And that kind of tipped the scale for us. But I do see the benefit of just saying, hey, let's invest this money first. Let's rent first, because especially if your rent is affordable, because sometimes your rent, depending on where you are, can be reasonable, and a mortgage could be maybe 1.5 times that. That difference of capital that you have can be invested, that can give you some returns, because 3 to 4% per year, if you're an above average investor, you can generate reasonable returns more than that, because the market does on average maybe, I think, 15 to 20. So 3 to 4, 15 to 20, that that sounds like a simple decision for me. But the truth is, can you consistently do that for 30 years? That's a question. So you may have a good year, but you may have more bad years than good. And so you may not even be the best person to invest that money. So I mean, there's that to consider as well.
So, Jermaine, just add on to that. I mean, let's look at the time horizon for investments in general. And so the consideration that you're making at your age and stage in life is probably very different from somebody who's in university or just coming out, maybe has their first job, etc. And the big elephant in the room, I think, when it comes down to real estate investing in general, is just to get on that property ladder, you have to have a down payment. So when you're 21 in your first job, maybe straight out of school, you still have some student loan debt, etc. And you imagine that, oh geez, everything that I'm seeing around the place, I need $2-3 million worth of deposit plus closing fees, etc. It feels like this huge hurdle to overcome. And it genuinely is. But if we're going to talk about, like, once again, real estate investment and diversification of your portfolio, etc., you could start by investing in some, REITs, other assets that reflect that real estate investment, benefit from it, split across, multiple sectors, even if you're participating 100% in public equities, and get that benefit to get onto the ladder. Now, later on, that ladder, as everybody has mentioned different things, whether you buy a house cash or you just invest in some property. I mean, Jillian, Xavier, I don't know if you have numbers to see how land grows in value versus a home over time. But I have quite a few friends that their path to getting on the property ladder actually was via land. So literally, I have a couple of friends that their first job after a year, 2 years of working, that $500,000 deposit. They could not buy an apartment. They couldn't buy anything with that deposit amount, but they did meet the criteria to buy some land out in Woy that we're all just like, why are you buying this property? It doesn't make any sense. You're buying this, 1 acre lot or something like that. That's for this $500,000, but there isn't even a road that goes there right now. And then it turns out that 10 years later, there's no infrastructure, there's no nearby developments, etc. And it's one property. Instead of it being the $500,000 that they bought, is now worth $2.53 million. And when you look at the compounded annual growth rate on that, that's a great, return for what was an initially relatively low investment, because they just invested cash up front. They didn't have much of a mortgage. They paid it off really quickly. And then they were then able to leverage that real estate asset to purchase other real estate investments later on, including their primary residence. So it's just, I want to hear more from everybody as far as like what you would have done at, say, maybe 20 versus 30, or what you consider 40, or, going down the line.
Yeah.
When I was 20, I would say that it definitely would have been an obstacle for me at that age. I don't think I was ready mentally or even financially to be able to, in my young 20s. I bought my house when I was 29. So my first apartment rather, when I was 29. So in my young 20s, I wasn't in that frame of mind, because it depends on your lifestyle too. Some people are that financially savvy that they think about it and they put it down and they have it just as an asset to gain interest off of it. And those people, kudos to them. But for me, I think you have to be in a mental place to be able to invest in real estate, because the process, if you're getting a mortgage, for example, the process is not easy. It's a mental journey. So that in itself, you have to be ready for that type of financial investment in the property and in the process. The process itself it's not easy. So that was one. So in my early 20s, I wouldn't have been thinking about that. But I think, as I said, it depends on your lifestyle. So I did a presentation on this the other day, rent versus buying, and I kind of outlined some of the lifestyle considerations of which one person who have certain lifestyles gravitate towards. So if you are someone who changes your job frequently, you're just starting out in a job, you have pets or children, or you're running your business from home, if you prefer to be creative with your space and be able to design your space and put different embellishments on your wall, or put a grill, or put something that you wouldn't be able to do if you were renting, or if you prefer having privacy, or if you are financially responsible. So those are just some considerations. Whether or not the answer to those questions is yes or no, it would influence which one you would be ready for, or more inclined to, in addition to the financial considerations, of course. But I would say that, thinking about your lifestyle in your early 20s, you're not stable in a job yet, more than likely. You want to have your financial, your freedom and your creativity to move about and to live in different places, probably. So buying a house is not in that frame of mind in the early 20s. When you're migrating towards your 30s now, and you start, your relationship is building, and you start having kids, and you say, okay, well, I have to find a place, a roof to put over my head. I was pregnant when I bought my first house. That's really what drove me towards the decision more than anything else. Yeah. So it was more that reason, the lifestyle reason, but it turned out to be a great investment. I bought my first apartment rather, in pre-construction, and it's appreciated in value. I'm in the process of selling it now, so it has appreciated in value because I got it at pre-construction, and I did a lot of the work inside when I got it. So that's an opportunity as well. If you buy it when it's not ready-made and furnished and fully adorned for you, and you actually put in some of the work, you can get it at a lower cost and fix it up yourself, and you see a better return that way. And of course, as you get older, the stability and having something to pass down to your kids, if you have kids, that is more appealing as you grow older. Is my thoughts on it, at least.
Yeah. Xavier, anything to add?
No, I mean, Julie pretty much summed it up. I think in terms of real estate as an investment between the last discussion and what we've touched on here, that should be about it. I'm curious to know what everybody has to say about rent versus buying now, and the different metrics there or nuances. So I don't know if we want to kind of segue into that now. I think one of the considerations there, if we're, I think a natural segue would be looking at what your mortgage would be. So one of the things that I touched on was, purchasing a home and then not living in that home. So having someone else pay that mortgage, and then renting somewhere for less than your mortgage would have been. And then I think the question then becomes, what do you do with that extra cash that you have, that extra disposable income? And that's where your mindset really comes into play. And how financially literate are you? Financial literacy isn't just about opening a bank account, right? So I know a lot of the buzzword in Jamaica is around financial literacy and the unbanked, but financial literacy comes right up the socioeconomic ladder. And this is exactly it, is what do we do with that extra cash flow, the difference between what your mortgage is and what you're renting for, right? Do you invest that? Are you going to go buy a fancy car with that? How do you manage that, So there's a lesson in irony that I'd like to bring up because I caught myself with it recently. Is I always share little gems about financial literacy on my Instagram. And so I had posted one, and then right after that, I was in Starbucks, and I had posted a picture of my coffee that had spelled my name wrong. And so I was posting a picture of my coffee and making a joke about it. But then I was scrolling Instagram, and right after that, I saw something along the lines of why millennials don't own homes because they're wasting money on all of that overpriced coffee. Right? And so I posted that as well as kind of like a lesson in irony. But yeah, so I think kind of segueing into rent versus buying, these are the things that you have to consider as well.
Well, so if we, go ahead, Jillian. Go ahead.
Yeah, and just to add on to that, there are a few things that in terms of finances that make a difference, or that person should think about when they're doing their rent versus buy calculation. So by law, landlords are allowed to raise rent by up to 7.5% per annum. Many don't, but they have the latitude to do so. So if you have a landlord that decided that they're going to raise their rent by that percentage, if you as a landlord can't decide that you want to raise your rent as well by that percentage, that can be considered in your renting out strategy. Mm-hmm. But if you are renting versus buying in terms of doing the calculations, your mortgage generally will not go up. I'll say that now that we're in this environment and in an environment where mortgages generally don't go up, but with COVID and with the economic times now, anything can change. But usually mortgages have the rate that you pay will not increase. So you'll have a stable payment over the lifetime of the mortgage. Generally, I'll say that now, but it can change. You'll have a stable payment for the life of the mortgage, but your rent can always increase. And over time, your rent can increase up to 7.5%. So over time, you'll see, if I could show you a graph, you see the rent price is going up, but your mortgage payment staying the same, and your income is likely going to go up over time as well. So your rent and your income are going up, so you're not seeing that difference over time in having some extra cash available, whereas your mortgage is staying flat and your income is going up. So over time, yes, that one, you found it. So over time, you'll see that your income is higher and your mortgage is staying relatively flat. So an investment in real estate over the long term, and we're talking like 10, 20 years, I think will always outperform renting as an option. Well, I won't say always. You will usually outperform renting as an option if you're going to be renting for 20 or 30 years as well, because of the fact that your rent can increase and your mortgage payment will stay relatively low.
Yeah. I think one of the key topics, or one of the key things to think about there as well, is your age when you're taking out the mortgage, right?
Yeah.
Which is why if the younger you are,
Definitely.
obviously the better it is to start thinking about that kind of thing. Says old me to young me.
Yeah, so that's a big thing, because if you're 40 taking out a 30-year mortgage, that's past retirement age that you'll finish
Right.
paying that off. And as I told you, with me and my wife, that was our conversation. Do we want to spend our best years paying off this mortgage? Because one of the things I was saying to her is that if we don't have this mortgage, we can travel more, we can see more of the world. We don't have to worry about, all the repairs or the things that come with owning a home. We can live essentially free. If we wanted to leave here, tomorrow, we could do that. And I wanted to, at that point, enjoy life and not necessarily be, owning a home wasn't that big a deal to me at the time. I understand it differently now, thinking, some of the things we talked about, leaving something for the kids, or having a place where family can come to. That means something more to me now, but it could just be a life stage thing. The younger you are, you're thinking more about, enjoyment. The older you get, you're thinking about that security. But it still doesn't necessarily mean that you have to, because I was saying to Xavier earlier, if it is that you maybe shift it up, you invest, you stay home if you can, and you invest that deposit money, that monthly payment money, for 10, 20 years. So if you're 25 and you're able to stay with your parents a little bit longer, I mean, most people want to move out by the time they're 25 because they want to be free. But just in case you have parents who you don't mind staying with, that deposit money, compounding 10, 20% per year, adding that monthly payment to it. If you do, purchase a property, let somebody else pay the rent, you're owning that asset that will become yours when in 30 years. You stay home and you build up capital again, you buy another property, somebody else is paying that rent. You can now, by the time you're 40, you have multiple assets that are about halfway paid up, and you have cash and flexibility and all the things that you'd want as somebody for that age.
Mhm.
Yeah, and just to add to that, so initially when we said that there's a 3 to 4, well, 4 to 6, I'd say up to 6% return, that's under the assumption that you're living in the house. So if you are renting that property out, that return is much higher.
Yeah.
Yeah, assuming that it's higher than mortgage.
Yes. Big assumption.
There's something else I think we should touch on as well, is being able to afford a mortgage, right? Because Julie, you spoke about all those early years not necessarily wanting to think about a home, and maybe you did some traveling like Jermaine wanted to do. Maybe you racked up some credit card bills, you know what I mean? And then now you're heavily leveraged, and not to make it sound so institutional, you have a lot of debt, your credit card debt, or you have a car payment or whatever the case. How do you manage that, right? And so there's one key strategy in managing that kind of thing, is what you kind of want to do is certainly don't just pay your minimum amount of payments, right? You'd never pay off your debt. It would last forever. So what you would like to do is, if at all possible, kind of identify first what the debt with the highest interest rate is, and pay that off first. As much money as possible to that, if you could put towards the principal, and bring that right down, and then kind of do that with the following debt that you may have as well, and just pay those off first, because the cost of that debt is far more than anything you're going to have. So pay that off first, and then you can see where you stand in terms of rent versus mortgage. Maybe you'll find you have a little more income, a little more disposable income to start putting down money now for a down payment on a place.
Yeah, there are quite a few it's called a snowball debt calculation. There are quite a few calculators available online. Jillian, I don't know if you have one of them on your site for the snowball debt calculation, but guys, there's quite a few. Yeah, you can check it out. I use one as well. But yes, some other points that I want us to highlight is, when purchasing real estate as an asset, we also have to consider the age of the asset. So for instance, if you find an older apartment that was built 30, 40 years ago and you get it at a great price, it's not necessarily going to increase in value as much over time. right? So you have to consider that as well. The other point is, and Jillian had highlighted this with as far as that graph and that the basically the free cash flow that you generate over time, whether you're buying or renting, that gap between your income and your expenses and how you deal with it, how you treat it. One, if it is that you're renting in US dollars, then that graph is going to be impacted by the constant devaluation of our dollar. Sorry, devaluation is not the correct term, but the fact that what's the correct term, guys? Anyway, the fact that we lose value each year on it is around 7% per year currently, and then on top of that, separate and apart from that, really coming back to our free cash flow, if it is that you're renting and you're paying less in rent than you would for a mortgage, how exactly are you reinvesting that cash? So if it is that a mortgage would be contributing towards an increase in your net asset value, or because you're paying down on this asset every single year, that counts towards your investment goals. Whereas if you're renting and then decide to invest the savings, that investment has to be really aggressive to overcome the fact that you have higher expenses, because every single rent payment is just straight expense, right? So you have to balance that along the way and see how well, I know Jillian has preached this time and time again as far as reducing the time of your loan, like from 35 years back down to 25 or 20. You'd be surprised that it's very incremental or small increments in increase in payments, but the amount of money saved on interest over time is incredible.
Yeah,
right?
I can give you an example of that. They dropped the rate on my mortgage a couple of years ago by, I think it was 0.5%, 550. Yeah, 0.5%. Let's call it 0.5%. And I told them that I didn't want to take the reduction in the payment. I told them to keep the payment as it was.
Right.
And just doing that alone, it reduced the number of years of my mortgage by 7 years.
Yeah.
I just saying that keep the payment as it is. 7 years.
We've been taking the benefit of paying less. We haven't. That
works as well, Jermaine, because you could invest otherwise in maybe something that generates 20 or 30% in a year, and then make a lump sum payment.
So that is a question.
On the same mortgage.
Jermaine, let's put you on the hot seat. What did you do with that additional income?
Oh well, so we do invest aggressively. So we invest in multiple asset classes. So for us, we have a fund. So we have been sending the same amount to our mortgage account each month since the mortgage started, and so each time the mortgage gets less, there's more cash built up. So the cash is either used to offset any that serves as our emergency cash. If we have a great investment that is coming up, we use that cash as well. If we have a business that we want to put that in, we use that as well. So, but I never thought of reducing the number of years with that amount, because that's one thing we want to do as well. Because if you listen to enough Dave Ramsey, you feel like you don't want to owe anybody anything.
Yeah. Which he's like an extremist.
Yeah. One day I was like, Rennie, I want to clear all our debts like next week. And then when you think about the process of clearing it, you're like, it's not worth it, because you have to do so much to live that lifestyle for maybe 5-10 years.
Yeah.
It might be worth it to be debt free, as the person's online saying, life is much different when you're debt free. I don't know that life yet, because I have a positive net worth, but I'm used to paying back something each month. So, yeah.
And to that, I saw this on Twitter, I think most of this week, that somebody's like, the persons who have gained incredible wealth have never done it without going into some sort of debt. So debt is a good thing if you use it wisely. Credit card debt, not so good, but you can still use a credit card wisely and gain from it and gain points and travel miles and those things. But paying 40% in interest is not a good thing. No. So debt can be beneficial. I'll never say that, you must get rid of all debt. You don't have to.
Leachin is a big person who recommends leveraging debt to make money. So
yes, that's.
We have a question. I think I'll pose it to Dimitri or Xavier. Claudette asked us 20 minutes ago, how do you determine if a house is a liability or an asset? How do you make that determination?
A house is an asset. The liability is how much you owe on it. So if you owe more than the house is worth, then you're in problems.
Yeah.
I think we're absolutely right, and it is possible to be upside down on your mortgage,
Yes.
right? Whereas you owe more than the house is worth. But I think maybe another angle of what she may have been asking was, is it costing you money or making you money?
Yeah.
I think that may be what she may have been asking. And the answer is a simple answer there is as we were discussing earlier, are you paying more than it's valued? Or so for instance, Jillian had said 3 to 4% appreciation if you're living in the house. If you're renting it out, it may be more than that. So at that point in time, if you're simple math, if your mortgage is $10 and you're getting a income of $12 and your expenses are less than the $2 difference, then it's to use the term, then it's an asset. It's making you money there. And obviously the converse is true. It would make it a liability once you're paying out more than it's actually making for you.
Right. And coming back once again to just the lifetime of this asset itself, you actually could be in the red at the end of a mortgage. So for instance, me personally, I live in an apartment. It's great, it's central, but it's also 40 years old. And I'm very hesitant about making an offer to buy it because frankly, there's a lot of things that are going to go wrong over the next 30 years. And so therefore, when I calculate the interest payments, if I was to take a 25-year mortgage, the amount of interest that I pay, I'm not convinced that the increase in value will reflect that over time. And particularly as well, because of the location of the asset, I believe that there are better opportunities to invest in underpriced opportunities across the rest of the island that I could still afford as well, would be coming at a lower cost, could possibly generate its own income and cover it, and therefore would be a better investment decision than necessarily purchasing my primary residence.
I agree. So for us, we've lived in our home for about 5 years. Our home has increased in value, but the amount that we've had to spend on repairs is ridiculous. And we're not even going to get into whether or not you can find good help at a good price. That's a whole different topic. But, somebody said to me once that there is a point that you can get to a place of over improvement, meaning you spend so much on the house that you start to get diminishing returns. So I think there was a best practice where if you have to spend more than 20% of the value of the house in repairs and upkeep, maybe that doesn't make sense. Because if you think about it, a $15 million house that, as Dimitri said, 40 years old, if you have to spend 3 million, 4 million on it, you have to factor that in. So if in a few years it's valued at 17.5, you'd have paid 10% in fees to own it. You have to pay 10% in fees to sell it, and you spend 3-4 million repairing it. You need to sell that now for 25, 26 to make anything reasonable.
And you have to hope that people like your improvements as well. I mean, shout out to all the gaudy homeowners.
Oh gosh. Yeah.
So we had found two calculators. We found a rent versus buy calculator. We found an investment calculator. So let me just kind of share this. You guys can let me know what you think. So what this is supposed to do, so it's a rent versus buy calculator that Xavier and I found. So we just, I'll share the link shortly, but it's calculator.net. And what you should be able to do here is just enter some of the details about your home price, down payment, interest rate for the mortgage, the term for the loan, just everything that applies. And then you calculate that, and it will say, for example, buying is cheaper if you live in this house for at least 15 years. Apart from that, renting is cheaper. And it kind of breaks it down for you and show you at what point you start to get positive cash, right? So in year 14, let me zoom in a little bit. In year 14, at this point, this is renting. I would have spent a little bit less in rent than I would if I was owning the home. Now again, if I'm gonna be at the same place for 15 years, at year 15, I'm gonna start paying more in rent than I would have been paying for the mortgage. And so if that becomes the case, then think about that and say, well, if I'm gonna be here for more than 15, 20 years, I love this neighborhood, I love everything about it. I see myself growing old here. Maybe buying would make sense in that case. And what we also found was an investment calculator where you can take that deposit amount, enter it in terms of compounding, let's say even conservatively each year for that same 15 year, 20 year, 30 year, and calculate that amount. So for example, I think what I did here was put like $1 million to start. Or okay, so my target would have been here $1 million. I have $20,000. I'm expecting to get 6% per year compounded annually, and I'm adding $1,000 at the end of each month. And this is what I would have. It would take me 28 years to get to that 1 million. So you can kind of use these calculators to say which one makes sense depending on the scenario that fits for you.
I think I like this one, especially when we're considering, let's say you buy a property, and then you rent it out. So you kind of there's a difference between the rent that you're paying and then your mortgage. You could put that here and say, okay, well, my mortgage is $10. I rent it for $15. What do I do with the $5 in the most remedial of terms? You know what I mean? This would be good for something like that as well.
Yeah. So another thing that when we were discussing it before, I wanted to mention the issue with having that extra cash each month is the discipline to invest it in the right way. Because when we look at this amount, the assumption is that we'll be depositing that available cash each month, but sometimes things come up. We get this urge to spend on something else, or we want to live a certain way, and we don't have the discipline to invest the amount that we need to get to our target sum. And so maybe if it is that those monies go to an asset, like a house, then you kind of help keep yourself accountable to ensure that money goes to the mortgage, as opposed to you maybe not investing it in the best way.
Mm-hmm.
All right. So yes, let me share the link here.
I was saying, Jermaine, to share. Well, I don't know if Jillian has it on hand. The link for her calculator includes both, like how much you'd be investing versus how much you pay in rent, to show you what the variance is in one sheet. So I can share that one.
Let me share.
One thing we haven't spoken about, guys, and I'm interested in hearing is we've mostly been speaking about residential, buy versus rent. Like, what about rent and then invest commercially? For instance, we've seen, a great run up with Pulse, 138 Student Living, Cape Rates. There's so many different listings or securities that have been listed that are benefiting from real estate exposure on the commercial and, I guess, in some ways, residential side. Why not consider, or should we be more considering, even within our own real estate portfolio, splitting some of our holdings between commercial and residential activities or assets?
I think that's an excellent point. Because right now we were just rent versus buying in terms of residential. And I think it's a combination of answers. One, your personal preference where you are now. Two, we identified that someone may not necessarily want to be buying a place as strictly an investment, right? It could be for legacy purposes. It could be for peace of mind, that kind of thing. If you are somebody that's certainly looking to invest and you want a return, then that's somebody that's going to be looking at a corporate, or a commercial investment. And to your point, as you had mentioned earlier, Dimitri, as well, is that if you don't necessarily want the entire exposure of investing your cash into one particular asset, in one particular building or office or whatever it may be, then you have some very good REITs, as you had mentioned, the university one. You have, I think, is it the Sagicor X Fund, and they invest in, I think, hotels and different properties like that.
And First Rock.
Yeah. So you have quite a different ones out there that you could spread your investment over as well.
Yeah, just remember to do the due diligence on these securities as well.
Sorry, I'm not suggesting you go out and buy these. I'm saying they exist out there in the investment sphere.
The point of what Dimitri is saying is that there is multiple ways to go about it. So you can get the benefit of being exposed to a real estate fund or a company that invests in real estate, because if it matches your risk profile to invest in real estate, those are viable options that would give you the same return. Because if ultimately you care about the building or growing of that asset, it doesn't have to be a physical home. You can invest in real estate without living in the real estate or it being a tangible home for you.
Right.
It could be, as Dimitri is saying, a fund, or it could be that you invest to be a part of, somebody who rents commercially. Maybe you pull together some funds and you kind of share ownership of a commercial property that you can benefit from as well. So it's not just what we've heard, 20, 30 years ago when we were young. There are other ways to do it that may make more sense for now than it did for our parents,
Yeah. And I support doing your research. I know I haven't checked in on this recently, but I know when COVID hit, the first couple of months after, commercial real estate was not doing so well because of the fact that everybody is working from home. Now that things are not everybody's working from home, but I know that there's some stores and commercial properties that are really not back in business at all, especially in the US for sure. But out here, I'm sure we have the same thing happening.
But have their prices moved? Because to me, those prices were just too unreasonable before COVID.
Yeah, I haven't done any research into the commercial prices recently, to be honest with you. But I know, just if you are thinking about investing, you really look at what's happening and what type of client the commercial space is engaging.
Yeah, I remember going to, this was maybe 2009. When I had a business, I was looking for a commercial property to rent, like 2,000 square foot. Or square feet, whichever, if my wife is here, she'll tell me which, But, we went to look at that property, and at that time, 2009, it was $400,000 per month to rent that space. And I was like, for me to have $400,000 to pay in rent before I pay staff, utilities, I'd have to sell maybe $5-6 million per month to even break even to pay that amount. And that plaza had maybe 60 or 70 office spaces. So that landlord was getting in some serious money each month. And I was like, this property has been here for a long time, but the rates are such that the businesses have to pay it because it's in demand. And it just didn't make sense to me. So I had to settle for a location that wasn't ideal for my business. That was a part of the reason why the business died, because we couldn't afford prime real estate to get the amount of traffic that we needed to grow. So I've always had this sort of, challenge with the fact that, for the renters now, for the commercial real estate owners, why not rent at an affordable rate so that the businesses that rent spaces from you can actually make a profit for their business? It's just something that I've always wanted to say. So I had to get
affordable is relative,
Well, so I'm imagining now that 12 years later, that plaza is probably renting for a sizable amount more than what it was at that time.
Mm-hmm.
And so imagine now that that person now has to deal with COVID. They want to maintain their office space and they have COVID. Like, you're bleeding cash.
Yeah, some businesses have closed never to reopen because of that fact, because they just couldn't afford the rent. But when things open back, there might be one willing to take its place. Just depends. But there are lots in America for sure. There are a lot of empty office buildings that are never to be populated again.
What you're seeing, especially when you look at REITs or any fund that invests in real estate, they have been hit particularly hard, because what you find now, I don't think it's going to be completely true for Jamaica, but what you find is that a lot of people are actually completely reverting to work from home scenarios. So I think in the US in particular, you may have a lot more long-term effects of COVID where the commercial real estate is felt. I do believe in Jamaica for various reasons. I don't see us staying out of the office very long. I think we'll be filling back up office spaces soon.
Yeah, I think so as well. I think that, and I think a lot of persons are waiting for us to get back to that point. And I think that's part of the reason why the real estate prices have not, relaxed. Well, at least to me at all, because persons are kind of thinking, well, a year or two from now, maybe I know definitely the Airbnb owners might have felt it because we're not having as much persons visit as we did before. But persons, so a part of my strategy, and I'll say this openly because I said it in March last year. One of the things I was hoping for is, because I remember going to a property to try and buy it for real estate, to own it as an investment. And because there was such a high demand by some Airbnb owners, we lost on that offer because, hey, they're willing to pay
premium
even more than the property was valued. So it was valued 20 million. They're willing to pay 23. So the asking was 20. They got 23 for it. And so I was like, if I bought it at 23, my mortgage would have been X. I can't rent it for more than that. And so it didn't make sense. But now I was saying, well, if it is that those persons now who might have bought it for Airbnb might not have been able to afford it, maybe I can now get a property a little bit more reasonable or fair value that, I could maybe take advantage of in that way.
So on that point, Jermaine, let's look at the long-term horizons overall. And I remember that there's a thread I have on Twitter that I got a whole heap of heat over, saying that I don't expect demand to fall anytime soon. The fact of the matter is that we have an entire generation of people who have been living with their parents up until their 30s because they can't afford to buy a home. Eventually, they're going to have some amount of cash and are going to want to. I mean, some will, of course, remain at home and become caregivers for their parents, etc., going forward. Yeah. But as families grow, etc., siblings, one person will move out, or etc., and so you're going to have way more demand going forward. We're not producing homes or constructing new homes at a rate matching population growth. We're becoming an increasingly attractive investment destination for overseas investors because we're an hour from Miami, very in the global sense, low cost real estate. I mean, the fact that you can buy a beach condo for still 150, 200,000 US dollars is amazing, right? And then on top of that, we're having an economic boom where none of us in our lifetime have ever seen economic stability where we don't have, a negative GDP.
Yeah.
Overall, depreciation of the dollar is now predictable. Depreciation was not devaluation. Yeah, depreciation is now predictable, and and especially with remote working. I mean, we've seen the cases of people working for top firms overseas earning Silicon Valley money, staying right here in Jamaica, and thankfully spending it as well. So going forward, we're going to have such high demand that I think that we do have much more growth to happen for the real estate asset class overall. The key is to just find out where to find the gems and not buy into overpriced, or let me not use overpriced, but correctly priced opportunities with the upside.
Agreed.
I agree. Yeah. So that's our position, me and my wife, because we said we want to find something that is fairly priced, because we look at it just as we would stocks. We would not buy a stock that we consider to be overpriced. We wait for it to correct. So we keep looking to see which property or which piece of land is fairly priced, because we don't believe in overpaying, because if you overpay, that impacts your mortgage, it impacts your deposit. And so that's a balance that we're trying to find. We do want to be in the space, but we don't believe in overpaying for the asset.
And imagine 100,000 people doing the same thing that you're doing.
Exactly.
So that's all that's gonna happen is the price is going to either remain or increase. Prices just general in Kingston and St. Andrew, especially. I have a friend, she bought a property for $19 million. It was in St. Catherine, and it's huge. She has land space galore. She has every tree you can think about, but you can't find a deal like that out here. So that's thinking about it. You have to make some sacrifices if you want to have that big property and have somewhere to put on for your kids and stuff like that in an area. It might not be in the area that you want, because remember, if you're thinking about Kingston 6, who are you competing with? You're competing with all the Airbnb people. You're competing with all the people that Dimitri just mentioned that they're coming into their 30s and their income is increasing, so now they have a little bit of down payment, or they've been investing, so they have to have their down payment ready. You're competing with all of the developers who will pay $100 million for a half an acre of land. So
the pensions.
The pension funds, you're competing with the pension funds, you're competing with all of the big name people, the Matalons and everybody.
REITs, everything.
You're competing with. So you have to find a gem like that so easily. You have to really put in some work, which a lot of people
and don't sleep on the rural areas either. Like when you don't sleep on the rural areas, because on the commercial property side, I saw a property sale in Junction St. Elizabeth the other day for $1 million, and I was like, what the hell? Like when did Main Street Junction become like a target area that people are paying $1 million for a property? But what will happen is that you'll have other people that are investing in their homes in these areas that them used to just keep this land to raise cow and goats, and then suddenly, they have digital fiber internet available there, and they can work remotely and build a really nice home there instead. And it's a whole lot more affordable, and they're willing to pay top dollar, because instead of spending $30 million on an apartment in Kingston, they're now going to spend $30 million on their house out in country because they now have internet access.
And landscape.
Well, I think, and so, sorry, go ahead, Julie.
No. I was adding that, and they have internet and land space and all the amenities that they need that they can't find here. So yeah.
Yeah, no. So Dimitri actually touched on something a while ago. So I would challenge you a little bit on the price of property in Kingston. So I've had several conversations about this with people that invest in property and that develop and so on. And the tone of the conversation was two things, and you kind of alluded to it as well, is why people are opting now to buy outside. So to either buy very small apartments in Kingston, or to buy something a little more dignified for their entire family outside of Kingston, right? And one of the reasons was that, especially with a lot of these newer developments, is that you have the pension funds just snatching them up. And so long as you have these pension funds snatching them up, the price is going to appreciate much faster than maybe you and I could afford, because you have these pension funds with so much money. And so I think I would push back a little bit on the price of real estate in Kingston in particular, being correctly priced.
Well, there's a whole lot of empty units now, and I don't know, I'm surprised that, especially for the rental market, I expect that with the Airbnb fall off because of COVID, that we'd have seen a lot more affordable rental rates. But I don't see them. They haven't come up, and people have just, I guess, opted to lock it up and wait it out rather than reduce the cost. But things are coming in cycles, and I guess if they decide that they're going to not make any income for 2 years but maintain a value for 2023 or going forward with more vaccinations, etc., maybe that is their strategy. But I'm really surprised. I expected a little bit of dip off of rent, which might have led to some foreclosures, etc., but I genuinely haven't seen it happen. Xavier, I know that you're working on that app. I don't know if you see a lot more on the auction side of things.
Yeah, so that's a good point, and it's a touchy subject, I think, because when when properties are going for auction, I guess it's good for business, so to speak, but it also speaks to the economy.
Mm-hmm.
But to kind of touch on the point again with all the empty apartments, but properties not going into foreclosure, again, it's who can afford these properties. A lot of times it's people that can afford to absorb this kind of thing that are buying the properties in the first place, right?
The first
So
place, yeah.
corporates, pension funds, people that have one and two homes already and they're buying a third or fourth home. And so I think it kind of bolsters my point about maybe the homes being a little overpriced for people to actually afford them, and people keep snatching them up.
Yeah, my realtor told me last year that she did see a few more rentals coming into the market than happened before COVID, because she said a majority of those were Airbnbs that had to convert to long-term rental prices. But there wouldn't be, I wouldn't say they would be affordable, because if you, I don't know if you saw my article about the Airbnb and how much, I did have a calculation of how much Airbnbs can get at the prices that I looked at the prices on Airbnb and I calculated how much it would be and compared it to a mortgage cost, and the cost of as in the income that you can get if you're renting, and I think I did an average of 4 or 5 days a week or something like that. It's so high. If those people were now having to convert that to a long-term rental, it would be a significant amount for certain properties in the Kingston area. Let's talk about Kingston. So for certain properties, that amount would be so high in rental that nobody's gonna pay it, or it's going to stay on the market for a long time, and the rental that they want is not gonna come immediately. They probably rent it to like a company or an embassy or something like that at those costs for some of them. But so she did see an influx, she told me, but the price is still high. It's not cheap rentals. Yeah.
So what I've seen as well, and I may not have the best perspective of it, but I see persons who either work in real estate, have connections with those who are able to build and stuff like that. To me, those are the persons with just the network that get to find the gems. Because even if you own a gem, probably somebody told you about it. Because I know persons who found a gem because maybe somebody said, hey, this I'm migrating, I have this property selling because I know I'll sell it for $10 as opposed to $12. I mean, that's, to me, the gems are just it's hard to find just by just going out there shopping. I don't know if I'm wrong in that perspective, but
so I'm house hunting now, and I would say that I agree that they're hard to find. I would say that my first apartment was a gem for me because I bought it at the price that I got it at pre-construction. But I just did it by looking through the paper at that time. That was 5 years ago. So looking through the paper and really scouring the paper and really taking the time. Every Sunday I would drive and go around and look at places. So it took a lot of work. It was like you look in the paper one time, it's like, oh, I found a house, and then you go and you buy it. It's not that easy. I still do it up to now. I buy the paper every Sunday. That's where you find the gems in my mind, because the people who are putting it online, they have to pay to put it up there, and everybody in the world can see it when it's online. So you're competing with people in USA, Canada. When you buy the Sunday Leader now, it's just the Jamaicans you're competing with. So it narrows down the field a little bit. So that's my take on it anyway. So it takes a little work in scouring everywhere to find a gem, and I drive around and I just look for signs too. I just look, is anybody selling? I just look for signs. And I still haven't found anywhere. So that goes to show that it's not as easy. I mean, anywhere that fits my criteria. There are places that I think would be gems for other people, but not for me. So
you know what you're saying, Jillian. So I wanted to ask everyone this: do you think, in general, our standards for owning a home may be a little bit higher than they should be?
Meaning what?
No, just like so for example, let's say that you can afford a $10 home and you want 4-bedroom, maybe 2-story in this location, and you find out, oh wait, now that's a $40 home. And so sometimes it matches with this thing. I hear that person say, well, you're not supposed to be able to afford your mortgage. It's gonna be, you know, a sacrifice for the first couple of years, but you'll adjust, you'll get used to it. So I feel like that makes you maybe put up your standard a little higher. And so we create that situation that we mentioned before where maybe I'm paying a mortgage that I can't really afford because maybe I have an unrealistic expectation as to what that home should be, even for investment, because you could also invest in a property that is unrealistic for your ability to either rent consistently or to maintain. So, you know, on both sides, what do you guys think?
It goes back to your own discipline and fiscal responsibility, right? You kind of have to know where you are. So I think by nature, a lot of people could be optimistic. You know, the old saying goes, "Don't count your eggs before they hatch." But people could be optimistic to say, you know, I will get a raise next year, or I am going to get that business opportunity, that kind of thing. You just really need to crunch the numbers. But I also think that your bank will put you in your place when it comes to taking out the mortgage for that
Yep.
house, right?
Yeah,
So
you don't really have that many options.
so I don't think you can stretch too much further than you're able to finance.
Yeah, and they call it being house poor when you buy your house and you have to sleep on the floor and eat crackers for the rest of the year. So I mean, and some people are willing to make that sacrifice for sure. I agree with you. The first couple of years, it is rough. Your repairs that are gonna come up that you don't expect, and you're paying this huge mortgage that you didn't have to pay before. And if you didn't account for that buffer between, so the bank, as David said, the bank is gonna put you in check, and they're not gonna give you more than they think you can afford. Using something like your TDSR, your debt service ratio, your total debt service ratio. So when they calculate that, they'll say, well, your debt shouldn't be more than 50 or 60% of your total income. So you should have that rest to play with. But then when you buying groceries, paying your car loan, and doing everything else with the rest, things and doing repairs and paying your maintenance, if you're buying an apartment, then things will start to add up, and you have to end up eating crackers for the rest of the year. So
I was gonna say some of the car payments are the amounts that you pay for mortgages.
Oh, that's a
That's a whole that we can have hours on that.
I think you should definitely touch on in a different topic. But guys, I'm
Yep.
going to have to leave you here. Thank you so much.
Oh yeah, man. We're
here.
up.
Yeah,
I was
man.
gonna ask you guys for final thoughts. So you want to share yours before you go, Xavier?
A parting thought is I know we're kind of
Like, answer the question: rent or buying, which is a better investment in your final?
You're doing the thing we said we couldn't do at the very beginning. Again, it really just depends on where you are in your life. You know, obviously, if you're able to afford a place of your own, then look into that. If you're able to afford a place and you can rent somewhere for less than your mortgage, then maybe that's something to look into as well, right? Have somebody else pay your mortgage and not spend so much money every month. But yeah, I think there is one thing I kind of did want to wrap up with, that we did kind of bash real estate a lot, right? So there was a lot of bad we said. We could have scared some people away from thinking about owning a home. You know, consider it. Speak to a financial advisor. Definitely speak to people like Jillian. She has a lot more knowledge than the other three of us up here combined, I'm sure.
Yes,
A
definitely.
lot more calculators, that's for sure. Yeah, but yeah, so that's me. So thank you again so much, everybody, the audience, and Jilly, Dimitri, it was great chatting with you guys.
Yeah, man.
Thank you for having me.
Yep.
All right, have a good night, everybody.
All right.
Cool.
Bye,
Right,
Xavier.
Jillian.
I'm right behind him.
Yeah, I was gonna
So
say,
my final words are, again, do your research. I'm an advocate for research. I will always advocate for buying. I mean, in the industry that I work in, and the belief that I have that every Jamaican can own a home if you put the right sacrifices in place, or put the right measures in place, and you have a little bit of sacrifice, you can have an asset that you can call your own and your home. So I will say buy, but of course that's in context of your lifestyle and everything else. So yeah.
Yeah, great. All right, cool. Thank you, Jillian. I think you have to run as well.
Yes, I have to run. Alrighty.
Okay. All right. Thank you.
You're welcome.
All right.
All
So
right.
Dimitri, any final words?
Boy, it seems I'm the only one on Team Rent over here. I absolutely believe that people should invest in real estate and should own property. But as far as it being personally for me, for my investment approach, I don't consider my primary residence as an investment property. If you left things up to me, I'd live out of a van and buy like property across the island and drive to different places each week and have that sort of nomadic lifestyle. But my approach generally is very aggressive, and I believe in maximizing my free cash flow as much as possible to invest in other opportunities, because real estate, majority of opportunities for me are just too slow, and I'm really just treating real estate as like a base asset to allow me to leverage it for other opportunities. And we do need to improve our asset base as part of our net worth, etc., going forward. So I fully support. I mean, what I did for the last 10 years basically was I rented a larger property that was more comfortable. I rented out 2 different rooms. I had 2 housemates. It wasn't always great, but you know what? At the end of the day, I had a lot of cash left over from my salary. I had a great property that I lived in that was very comfortable for me. And it was very affordable compared to something that I would not have been able to mortgage any at all at that time. Right. So depending on your stage in life, of course, make your consideration, see what's the best choice. And I would advise everyone, if possible, to sort of take the emotion out of it and just treat it as a stock, any other asset, and just leave it as such, because you never know what's happening in life. And I prefer the flexibility of just being able to pick up and walk away, rather than being, as you're saying, you have this huge mortgage that you're then, anytime you have a new job opportunity, you might want to migrate, you might want to move across Jamaica, you might want to have kids, different things happening. You just always think that there's this primary expense that's on your head, which is much less when it's not your residence, your primary residence.
Yeah, so I'm team rent, but because of the considerations, and so me and my wife, we made the decision together. So it made sense for us long term to have a place we can call home. But I'm definitely of the mindset that renting gives you that flexibility. So it really just depends. I think there are multiple considerations to make, and it really depends on, because if you're single, it's different from whether or not you're married. If you have kids, the consideration is different. If you have family members that you need to take care of, the consideration is different, because a lot of persons I know quite a bit of persons that, maybe they have a parent who is not well, and so that parent needs room to stay with them. So it's either they stay with their parent or their parent goes to stay with them. Those are things that will affect your decision. So I say, if it is that you have the discipline to invest well, you can rent. It's more affordable, it's more flexible, and you can invest and build wealth. And then maybe at a later point you can own a home, because it doesn't have to be the 10% deposit. You can pay 50%, you can pay more, and so your mortgage is less. But if it is that you have the opportunity, I think if you're a little bit younger, like, everything favors you the earlier you start. So if you start a mortgage at 25 and your income grows with you, that mortgage will be less and less of an expense. So by the time you're 45, 50, you own that asset free and clear, as opposed to taking out a mortgage at 40. So it really just kind of depends. I do agree with you where real estate for me is a part of my portfolio. It's not the only thing I'm investing in. I take a lot of other asset classes as a part of this whole portfolio that I have. And so, it is something that, as I said, I'll add more of once it's correctly priced or reasonably priced. I'm not going to overpay for it. And it just has to make sense based on what the potential return is, because opportunity cost is a real thing. So if I'm putting that money each month to a mortgage, then that's money that could be used doing something else. So, we see stocks all the time, 40%, 50% in a month, real estate, 2% to 3% for the year. So I've always thought that real estate is one of those where if you can find the gems, great. But if you have a certain risk profile where you want your assets to grow faster, real estate is one of those that you have to understand what it comes with. It's there. It costs you a lot to own in terms of fees. It costs you a lot to sell, costs you a lot to maintain. So make the decision based on what matters to you and your time horizon, as you said, Dimitri, and just kind of use that to be a guide. So it, as with everything else with investing, it depends. So it really just comes down to you. But I think there's benefit in either option depending on what your income is and the other things that may be a factor. So yeah, I'm definitely for that. Renting, if it is that you find a better opportunity. If you can take 2 million now and invest in something, or invest in a startup, or invest in a project or a business that can give you multiple more in terms of returns, then buying a home is a small thing. If you take 3 million and invest in a startup on the ground floor, 5 years, 10 years, that's valued 100 million. I mean, it just, there are other ways to invest, you know?
Yeah, exactly.
Yeah. All right. So there's one other question that we got from, I think, Adriel. Hopefully I'm pronouncing that correct. Do you think with the government's move to improve the highways in areas like Manchester, Clarendon, there will be an increase in value or demand for real estate in those areas?
Yes.
I think so, yeah. I mean, it makes sense because a part of them expanding and making highways is to actually, I see it being a natural thing that demand will start to move outside of Kingston into other areas because, as we said, the population and the demand is growing fast. So you are going to start going out to those areas. They will become more commercialized at some point. You don't know when or which ones will go first, but it's I think it's a reasonable assumption. Yeah. All right. If there are no other questions, I think we can probably close off here. So I know usually some persons will watch this on the replay. So if you have questions for us, leave it in the comments below. I'll share the link to everybody's Twitter in the description. I know Dimitri is always available for conversations on Twitter. Dimitri,
Yeah.
you want to share your contact and how persons can reach you?
At UTenJM, UTENJM, on basically all the social media. So yeah, feel free to send me a DM, tweet, anything going forward related to, well, I mean, just let me know. I enjoy speaking with people and just learning more from them, etc. So yeah, looking forward to more investment-based conversations. Yep.
And I was going to ask you, based on how you described the type of companies you invest in, would Learn, Grow, Invest apply for a type of company that you would invest in? I wanted to ask you that.
Possibly. Yeah, maybe. Let's talk somewhere afterwards.
Yeah, I definitely had to ask you that because we think that we have a lot of ways to go. This community is growing. You see the type of conversations we have here, and we have some really, really interested persons in understanding investment, learning more. And so I think, yeah, we have some good upside, you know, in the future.
Definitely. Right? Media is gold.
Yep, I agree. All right, so cool, Dimitri. Thank you so much. I'll definitely reach out to you again to join us for another episode. I wanted to cover just the kind of just get into some more investment conversations around real estate, different asset classes. I did ask Jillian to come back and kind of break down, get into the numbers in terms of real estate. So I'll keep you all posted on that one. All right.
Sounds good.
All right. Thanks a lot, man.
Thanks. All right. Good night, everyone.
All right. All right, guys. So thank you so much for being here with us, those who are here from the start. And those who joined after, thank you so much. I'll ask you before you go, please like this video. We need you to like the video so that YouTube sees that you enjoyed the content. Thank you, Nicholas. Leave us a comment below the video. That helps. The live chat goes away after a few days. Please share the video if you know anyone who's thinking about buying a house. Have them watch this conversation to see some of the things that they should consider. We'll post the link to Jillian's calculator and considerations for renting versus buying. I'll share the links that I showed with the investment and rent calculator soon. Next week, we have an episode coming up about whether or not you should trade or invest. We're gonna have a very special guest. I won't reveal the name of the guest as yet. So just subscribe, turn on the notifications. I will be back here next week, Thursday. All right. Thank you guys. Have a good evening.